Hi, this is Paul from globaltradingsoftware.com, and this is another stock swing trading tutorial, but this is more concentrating on behavior. So I'm going to look at a price action and everything from the pandemic pullback in the beginning of 2020. Looking at Microsoft on the daily time frame. I am briefly going to talk about the signals because I'm very proud of the expert algo because it is my trading brain, and the only signals that have been in this last period since the pandemic was the bounce, which gave us the 5 and the 6 star buy. Then we had quite a deep pullback and we got a 5 and a 6 star buy here, and then when we started reacting to Russia Ukraine, we got a 6 star sell. So in this period of 2-3 years, we have not had many signals on the daily time frame with the expert algo, but they have been what I call hot snot, because the expert algo is designed around my trading brain, and that trading brain really started with swing trading stocks. But what I want to do really is talk about why, for most part, you would have been staying in the long on Microsoft from that pandemic pullback, using the manager. Again, it's my trade management brain, and we talk about behavior. So I'm going to go right back to the pandemic pullback, and we're going to talk through the manager and how it sort of kept us in the trade sort of thing. So first of all, we had the pandemic pullback from, beginning of February 2020. We had a parabolic pullback. We did find some good support at previous support and resistance zones, but I'm not going to talk about those today. The main thing is we pushed back up. 5 and 6 star buy and expert algo were long again. Yeah, everybody's weathered the storm, and we're long Microsoft. So how long do we stay in this position where we have the manager set on swing trading settings? You can be a little bit more aggressive. You can put, when you're swing trading, put that on day traded, conservative or moderate, but I got it on swing trading because always when you're looking for investing, when you're looking for longer term swings, so a year, 2 years, that sort of thing, coming up to your retirement, you've got 3 or 4 years left, you're looking for positions to give you a run into that retirement. We want to know how to get out, when to get out, or when to stay in. So with the manager, we have the ribbon first of all. So this is our sort of go-to gauge. As long as that remains green, we stay in. Okay, that's very simplistic. And that entry there was around about, well, that's where I got in, 164.35, and we got to highs of $340 there. So, and eventually the cloud the ribbon turns to red at this point here, around about $311. So it was a great position to hold. But what kept us in was also understanding the behavior. So a couple of things. The first thing is the candles are colored differently. So there's 2 colors for up candles. There's gray and there's green. So when you see a green candle, it has more volume than the previous candle. Whether that's an up or down candle, it doesn't matter. When you see a grey candle, it has less volume. Then there's 2 different colours for down candles. There's red, which has more volume than the previous candle. And then there's cyan, which has less volume than the previous candle, but it's still a down candle. And we need to understand some sort of basic chart patterns as well, but really what I want to talk about today is the volume as well, because when we get that volume within compared to each candle, so accumulation or distribution, or in fact if it's higher than average volume or lower than average volume, we can sort of ride a pullback against the direction of our trade, if you like. So one of the things also look at is candlestick patterns. Mainly I'm looking for rejections on high volume and higher than average volume to give me sorts of confirmation, if you like. So The first real pullback, I think, after the pandemic pullback was this point here. So we're talking about sort of July 2020. We get a little pullback. Now, some traders could have panicked at this stage. You know, we got to those highs of 215.12, starts to come down here. All of a sudden, nearly $200. Think, oh, I'm going to get out here, and I'm just going to take my profit. But there's a couple of things to be aware of on the chart straight away. We got a big pivot. Please do not disregard when we're looking for major support and resistance. This pivot here really is the one before the pandemic pullback. Okay, so if it can breach that pivot and it doesn't come back below, that's a pretty good sort of frame on the chart really. So when we're pulling back on this pullback here, let's look at the behavior and talk about the behavior. So we get an indecision doji here with higher than average volume. So it doesn't like the highs, it doesn't like the lows. That's not giving you any information. You just know that there's higher than average volume in that candle. It did close red, so it's got more volume than the previous candle, but there was total indecision there. The follow-up candle is important. That has higher than average volume, but lower volume than the previous one because it's coloured in cyan. And then cyan again with lower than average volume. And it's running out of juice. Then we get the pivot low here, green candle, higher than average volume, starting to pull back up again. Another green candle, higher than average volume, doesn't have the juice. So it turns back down again. And what we get, we call a one candle wonder. So that's a red candle. So we're increasing volume all the time here, has higher than average volume, but then it runs out of juice again with the cyan candle. Then we're going sideways with these dojis. Then we get another doji here with higher than average volume. It's a slight bullish doji, and then the follow-on candle is the one that gives us the confidence that this pullback is over, because that's a big green candle. That's higher volume than the previous candle, higher than average volume. We get another little pullback here, lower than average volume, and then we push back up again. So this is where the next critical phase is. We get higher than average volume red candle here, okay, but it rejects the lows, and looking at that, it's a 618 retracement, okay. The following candle, again, higher than average volume, red candle, so there's more momentum building up. It rejects by about 386 retracement-ish. Now, the next candle is really important. If that momentum is going to continue down, the candle will be red and higher than average volume, because we're going to get increase in volume. But we don't. We get a decrease in volume. And then we get an inside candle here, decrease. Then we start again with the red candles, but lower than average volume. A one candle wonder. We're starting to find support. And then it goes again, goes back up again. Now we've got two supports there, two pivots that we can actually say that we've understood the behavior moving through this. We've understood the behavior here. It's pulled back up again. We've understood this behavior here. We've not panicked. We've not got out. It's formed a double bottom. Okay. So on this one, we're saying to ourselves now, lower than average volume coming down, higher than average volume red candle, then higher than average volume cyan candle. Red, cyan, red, cyan. There's no continuation. There's no red. And it finds support at this point here. All the time, the ribbon is remaining green. We're still confident. Push up again. Doesn't quite break that previous high. No panic. Lower than average volume all the way down on this pullback. Push up again. Lower than average volume pullback. At this point here, we get higher than average volume red candle here, but it rejects 50%. Then a cyan candle. We get a solid red candle here. This is something to be a little concerned about if we get the follow through, but we don't. We don't panic. Ribbon remains green, pushes back up again. What do we have here now? We have a little bit of support this sort of area. Okay, it's not massive, but it's there. The main thing for me, when we break this previous pivot high with these higher than average volume green candles here, this is a good sign momentum's continued again. We pull back, red candle, higher than average volume, one candle wonder, cyan, volume's dropping again. Starts to pick up, tries to push down with two candles. This is the closest we've come to actually taking our profit. If there's a third red candle with a cyan dot above, that would be three higher than average volume red candles. So each candle would have been higher than the previous. There's lots of distribution, lots of sellers, but it ran out of juice again. Goes sideways, pushes up. We now come back down again. I'm telling the story here, but this story is only printed one candle at a time. It's a daily time frame. But this is now into May 2021. You know, we're a year into this trade or investment. We're starting to come down again. We have a red candle. So it has higher volume than the previous candle, higher than average volume. Then it runs out of juice again. We get down candles, but it's cyan. The volumes, the juice is running out. We do get a one candle wonder again, but the juice runs out again. Then we get these two candles. Third candle would mean we're out. We don't get it. Pushes back up again. Keeps going. Now we get another pullback. This time we get the first red candle higher than average volume here, but then it's a one candle wonder. Then a second one. Then we get indecision doji with a rejection of the lows. The body of the candle is higher. It's in that upper third quadrant. Starts to push up again. We get some more expired algo signals at this point. This is where I would add to the position. We get some pullbacks here. Now this is where we start to think about getting out. Okay, red, higher than average volume, red, higher than average volume. There's four red candles there now. This is really starting to gather momentum. We can take our aggressive exit here at 321.84. If we don't, we get out at this point here, 310.74, because then the ribbon turns to red. We've got to get out. But again, we've seen this behavior, red. The last two reds have got higher than average volume. This thing's going down, okay? This was the early warning signs that this thing's going down, because unlike anything else over the previous 18 months, that momentum continued for 4 candles, okay? 4 days, that's a long time. And then eventually we get the 6-star sell signal, and then the ribbon remains red all the way to where we are right now. So those that short stocks would have got in at around about 284, and we're at 233 now. But the main thing I wanted to show you was the manager is a very important tool when managing swing trades, long-term investments, because it will allow you to understand the behavior. And having that on the daily time frame, the daily time frame is the holy grail of time frames for swing trading, because the day has an open, a high, a low, and a close. Put lots of those days together, you understand the volume, the average volume, you understand the price action, you get to understand the full behavior, and the manager allows you to do that. And because you had the manager in this position from the pandemic pullback, 164 to around 310, without it, you would have panicked. This pullback. It stops you from panicking and allows you to remain in positions longer to maximize those profits. So this is the TradingView version. I'm going to put the link into TradingView version of the manager down below. I'm not really going to put the links in for the signal generator, the expert algo. You can go find that on the website. The main thing about this video was about trade management, and it's also available for lots of the platforms. I'm going to put that link in there below. Hopefully that's how. Remember, you need price action, volume distribution, volume accumulation, and average volume. if you can combine those together, you can understand the behavior of a stock. Okay, and then the manager puts all that together, makes it graphically easy to understand that behavior, and allows you to manage the trade properly.